All right, let's look at gold. When we're trading this setup, okay, when we're trading these setups, there's only one setup you need to learn on JaySignal. It's called the number 3 setup. And the number 3 setup is very, very simple. Is what we want to do when we're trading off, there's 2 time frames I use. I use a 3-sim Renko and a 5-sim Renko. A 3-sim is a shorter time frame, and a 5-sim is a 5-sim Renko. It's a Renko bar type, is a longer time frame. The 3-sim will catch the short-term fluctuations in the market or the shallow retracements. And one of the setups we like to do, there's value here. There's HVA, high value area, which is in red, and low value, which is green. If I get back inside of HVA, I've been outside of it, high value, that means the market is weak. You take the first JaySignal short, and this just nailed the high. There's your first JaySignal short right there. Okay, the first JaySignal short, it's the best time to take your overall setup. That is where you want to get into the number 3 setup. You get back inside of HVA, you retest on the first retracement, look for the fib dots, there's your arrow, there's your triangle, hasta la vista, she goes down. She even broke down through LVA too, low value area. This is a setup phase. Once you break low value area, the first retracement, you got a pull-in bar right here. You got 2 shots at taking gold short with, even after news. After news right there is your exact pull-in bar. The close below the spinning top. So 2 big opportunities from 1204 down to 96. That's an $800 opportunity on the first one. And then 1202 down to 96. You got a $600 opportunity on the second one per one contract, just off the news event right there. The 33 fill, 832, almost 833 fill was a really easy one to get. All right, as far as that one goes. Now the long time frame is a 5-sim Renko. You see I don't have a lot of retracement, right? I don't have a lot of fib dots that come up. So you can tell the difference between a 5 and a 3. See, I had 2 opportunities on the 3 to get short on market profile. We only had 1 on the 5. So the 5's not going to give you a lot of retracements. But when it does, it gives you a great opportunity. Broke through LVA. There's your first retracement. There's your signal. And nailed that $600 trade short per one contract on gold. So those are the 2 time frames. I put them beside each other like this, the long time frame and the short time frame, to see when these deeper retracements happen. And just put them like this. And that's how, like yesterday, we caught the big crude oil trade. If you look at yesterday's crude oil trade, look at this little setup. You took the first retracement long, and look at these setups on the way to the upside. Just a real big giant move. You broke out, you got a trend change to the upside over at 845, and there it is. And here's what you got to do. You let market profile set the trade up by breaking outside or inside of HVA. Then you let JaySignal produce the exact fib dots for the area, and JaySignal as a trigger to get in. That's the methodology on JaySignal. Market profile sets the trade up. JaySignal produces the entry. Market profile sets the trade up. JaySignal produces the entry. Symmetry dots are used to scale. Black is for the hard stop. But that was a 200-tick move. Just on crude yesterday on the same thing off the 5-sim. So when you trade these guys, you can see I'm getting another fib dot producing right now on the longer time frame. Is that you don't get a lot on the longer time frame. The shorter time frame, very, very simple. We just want to trade it when we break inside or outside of value, HV and LVA, and take the first retracement long or first retracement short. And don't make it any more difficult than that. And then just nail the $800 or $600 trade. $800 is pretty much right at news. It's hard to get. $600 trade potential. That one's an easy one to get because you're taking the first retracement. You had a couple minutes to get ready for that trade, and that produced that. Go down to crude oil, Gerald, if you can, on crude, on the 3-sim. If I look on crude oil over here, if I look since midnight, look how we broke out of value right here. Look how it broke out of HVA. Remember, market profile sets the trade up. Market profile sets the trade up. So we broke out of value at HVA, and you take the first retracement long on the fib dots. There it goes. Then you got back inside of HVA, just like our gold trade did just a second ago, produced that $800 trade and $600 potential trade. Got back inside of HVA, right? So you take the first trend change, first retracement short, produce that big move. Now what we're waiting on, if you're trading the 3-sim, you don't want to trade this middle. You don't trade all the signals on JaySignal in the middle of profile right here. You don't trade any of these signals. These are weak signals. You don't trade these. Do not trade these because you're not breaking outside of value or inside of value on the first test. This is a no trade zone. You do not trade the no trade zone. You want to trade the first break of HVA and the first retest. The first break back inside of HVA and the first retest. And once again, our gold and our crude trades, you're done early again. Why? Because what it's doing is allowing you, market profile is allowing you to get the first retracement with JaySignal or a high probability trade because it's catching the wrongly positioned traders that are trading market profile. Okay? The reason it works when you break outside of high value, a lot of traders are short high value. So when it breaks high value, that first retracement is just taking all the wrongly positioned traders out. And you come in, get a nice push. Then when you get back inside of high value, it catches all the wrongly positioned traders, stops below high value. We take the first retracement short, and it's like a self-generating trade. Very simple way to do it.